The big story going into today were the CPI numbers, which ended up coming just a few minutes ago in line with expectations at 2.9%. Core CPI also rose to 3.1%, but it was in line with expectations of 3.1%, which puts CPI at its highest level since January 2025. So although this has confirmed the fact that we are probably going to get a 25 bips rate cut, at least this is being evidenced through the probabilities here, it does mean that inflation technically is ticking higher, and that you can see in the probabilities has muted the chances of a 50 bips rate cut. So in today's video, I want to talk about the implications on the market, and broadly speaking, I want to dive into my plan for Q4. So we're now in September, we're heading into this rate cut that is going to be happening in about a week's time, just under a week, 6 days. But I want to talk about how I'm actually positioning today, what my plan is. I have a very good question that I picked from yesterday's comments, who is also going to win a giveaway today, asking me about my positioning for Q4 and how I would go about constructing my portfolio. So I'm going to go through that and a bunch of altcoins as well and narratives that I think are going to factor, especially in October, November, December. So giving us a bit of a window of opportunity now. I'm also going to go through my core portfolio and recap how that's been performing, because we have seen some strong gains, although we have seen a pullback in some of those tokens over the past 24 hours. And I think one in particular looks like a good buy right now. So make sure you do subscribe for daily crypto content. I'm dropping some bangers at the moment and keeping you guys up to date with everything that's happening in the market. And of course, we've introduced comment of the day. So leave a comment to put yourself in the running. Just ask me any question to win $500. Once again, I'm going to pick someone today. And towards the end of this video, we're going to have Gem of the Day, which is the new series where I'm bringing you a low cap. Today is an extremely low cap, and it's a bit of a risky play, but I wanted to bring it to you because I think the narrative is quite compelling, especially with what's happened in the Pokemon collectibles craze recently. So that's a bit of a hint as to what you're going to get later in today's show. But firstly, let's pivot off this CPI discussion and use this to look at how Bitcoin reacted. And basically, look, we saw a bit of a whipsaw either side. This typically happens when you get like a leverage flush around CPI. We saw a big pump and we saw a bit of a flush, and it's now stabilized around 114. I don't think this shocked markets at all. I think this was exactly in line with expectations, so it shouldn't affect directionality too much. Maybe it slightly mutes the probability of a 50 basis point cut. The probabilities went down from like 8% to 5%. So maybe that puts like a tiny bit of pressure on the market today, but overall people were expecting a 25 basis point cut either way. So I guess it's a no-brainer to neutral, and everyone's looking forward to the rate cut, which is obviously going to be the big day of the month and probably the big day that's going to set up Q4. You can see on the Bitcoin chart here, we've been discussing this a lot. We actually did see a reclaim of the 113.5 level. This isn't a confirmed reclaim because even though we did see price action above on the 4 hourly, we haven't actually seen a daily close yet. So typically you want to move up the timeframes to get confirmation. And then obviously a weekly close later in the week on Sunday is going to be something that you really want to see to confirm this pivot. So far it looks like a reclaim, but we don't want to confirm it just yet, although it does look like positive signs that Bitcoin is now starting to shift into an uptrend. So overall, that is quite good. Looking at the others BTC chart, I think one really positive sign is the fact that altcoins on this bounce are actually outpacing Bitcoin, and they continue to head towards this orange line, which I've been highlighting actually for the past few months as a very logical zone that we can come up and retest, which marked prior resistance multiple times. So I think we do continue to push up to this zone. We could see pullbacks along the way, and that's where I do expect a bit of a reaction, potentially a rejection, where you see the market going back into Bitcoin, and that also aligns with the current trend for Bitcoin dominance at the moment. You guys know how I have been anticipating, as I've been saying over the past few shows, a sweep of this level that's probably going to correspond with that orange line retest on others, and then we probably see a Bitcoin dominance bounce from there, which shifts the focus back into Bitcoin and maybe gives Bitcoin that fuel to run back up to not only the channel high here, but potentially break above and go on a bit of a leg of outperformance. So I think this plays out over the next month, 2 months and a half. And then I think we see that rotation back into alts. But I will get into how I'm positioning for all of this very, very shortly. Firstly, I want to discuss a portfolio that I posted on my X on September 6th, so 5 days ago. Basically, I did a tweet saying that Bitcoin, ETH, Sol, ENA, M&T, Pump, and Hype is probably a decent core portfolio to hold heading into Q4. Since the time of this post, we've actually seen a lot of these coins perform extremely well. Pump Fun up 33%, Mantle up 37%. If you scroll down, you can see Hyperliquid up 16%, outperforming the market as well. So this was a well-timed post, but it wasn't by coincidence. The reason I picked these coins is because I believe in terms of relative strength versus ETH and Bitcoin, and in terms of narrative, they are aligned with the market and are showing signs of outperformance. I'm going to give you an update on some of these today and let you know where I stand in terms of PA. To recap Bitcoin, I think Bitcoin overall looks quite strong, and I think you do have the tailwind of the fact that you have the money supply and M2 continuing to increase. That's pushed gold to the upside. Has a lot of buy demand being put onto the gold chart, which is causing the discrepancy between gold and Bitcoin to skew more in gold's favor, which I think is good because it anchors the Bitcoin price higher on a relative basis for Bitcoin to potentially go on a catch-up run versus gold later in the year. So I think ultimately that's a good thing. On Ethereum, I still think it looks structurally good, although it's just chopping sideways in terms of ETH BTC. Solana looks good. We're going to speak about that. And ENA, there's actually a bit of an opportunity on the chart right now, which we're going to speak about later in the show. But this one has been a good core portfolio since I first mentioned it, because a lot of those are up 10, 20, 30%. And if you did miss it, you're probably getting a couple of entries at the moment. I know Paradise did a stream earlier today talking about the fact that a $50 retest on Hyperliquid could be an opportunity. And today I'm going to show you how there could be an opportunity on Athena. So it's, the market's not always about just aping in at any given moment in time. It's about carefully curating and building a portfolio heading into a rough period where you expect to see upside. And I guess this leads me into the question, how am I positioning? And I got this question from my video yesterday. So Nick Novak, congratulations. I've selected your question, which means you win $500. Go on to the last video where you commented yesterday and just reply with your wallet address and tell me the chain where you would like your USDT sent on, either the Solana blockchain or the Ethereum blockchain. So well done. You are the second winner of this $500 giveaway that we're now running on the channel. To give yourself a chance of winning $500, just comment on this video. It can be a question, ideally. It can even be a comment. I'm going to pick some statements over the next few weeks as well. Just comment any question, comment a statement, and you could potentially win $500 on the next show. So Nick's question here was, if your goal was to achieve a 10x return from this point, how would you structure your approach to maximize upside whilst minimizing downside risk? Now, I have my approach, but the approach that I use is probably not going to get me a 10x. So this is where I just want to be realistic with everyone. The chances of you 10xing in terms of your overall portfolio performance are extremely low, because the type of risks that you need to take to achieve a total portfolio 10x are frankly too great for the average person. This would likely look like 80% exposure to altcoins, and out of that 80%, at least half of that would need to be lower cap altcoins, at least below 500 million, and you would need multiple dart throws in the very low cap range, and you would need to be quite in tune with the market to actually pull off those rotations and actually take profits at the right time. Too many variables need to go right for you to achieve a 10x return. So I say you have probably a 10% chance or less of actually pulling that off. Now, your portfolio may actually hit a 10x at some point, but realizing a 10x is really hard because it likely requires many of those coins to go up a 20 to 30x for you to achieve a net 10x. Even with Pepe, which was my first 100x in crypto, I probably only achieved a 20x, not a 100x, because I took my initials out at 2 to 3x, then I took some more out at a 10x, and more out at a 20, 30, 40, 50, 60, 70, and because I laddered out over time, my average sell was probably only a 20x, not a net 100x. You're going to experience the exact same thing with chasing a 10x in the market. What I think the better strategy is to set your goal and then reverse engineer a portfolio split, set a realistic goal that actually, aims toward your goal. So look, if you are really achieving a 10x, yeah, you might need to go 80-20 in favor of alts, but because I only really need to, or have the objective of like 2 to 3xing my portfolio, I'm skewing the other way. I'm going 80% core portfolio, and this is roughly my core portfolio. I have a few things in here that aren't necessarily reflected here, but this gives you an example. And then with the other 20% of my portfolio, I'm taking much riskier bets. The way I split my portfolio is that 80% is a bit safer, and then the 20%, I'm throwing some darts, I'm getting into some degen low caps. I'm going to speak about one later in the video that could potentially be a low cap you can look at. I'm getting into narrative plays, I'm chopping in and out of the market, I'm taking on leverage. I'm doing all of that fun stuff with 20% of my portfolio, and I'm being a bit safer with the 80. Now, obviously, the higher your targets, the more you're going to expand the fun stuff part of your portfolio. But just keep in mind, the more you expand that, the more downside the more downside risk you're taking on. And then the last thing I'll say to you, Nick, is that you need invalidations. I think to actually protect yourself against downside risk whilst attempting to maximize upside, you need to have invalidations on all your core positions. Now, I don't mind if you have some coins where you spray and pray and you don't set very tight invalidations, but I think on the majority of positions, especially things that represent 1% or more of your portfolio, you need to have some sort of downside on that coin where you would actually sell that coin or sell a percentage of that coin. And that can be a mix of a technical invalidation, and you can allow yourself room to also have an adjacent fundamental invalidation if that gets triggered. So hopefully this helps your question. And I think to actually contextualize this, now we're going to go through some altcoins, some specific examples of coins that I am either positioning in for Q4 or I think are interesting plays heading into Q4. So the first point I want to make is talking about the barbell. I spoke about this in yesterday's show, but I think it's important that you frame your portfolio in terms of narratives, and then you work down from there in terms of going up the risk curve. For example, you might be bullish on Ethereum and Solana. So what you can do is have Ethereum and Solana on one side of the barbell, so you might own 80%, and then 20% of those position sizes will be dedicated towards ecosystem altcoins. So you'll have, let's say, $800 in Ethereum and then $200 in the Ethereum ecosystem, or $800 in Solana and $200 in the Solana ecosystem. Having this barbell naturally allows you to get higher beta returns if the market does pump to the upside, but because you're mostly concentrated in the leader, you're not exposing yourself to massive downside in the market. So looking at Ethereum here, I think it looks good. It's just coiling up below the prior all-time high. I think the real fun for alts doesn't happen until ETH makes a new all-time high. If I had a best guess about when this is going to happen, just in terms of momentum and how long it typically consolidates for, I would say maybe October to November, just purely based on the chart. But of course, there's a chance that gets front run. There are two betas that I'm mostly interested in right now. Athena, which I've been positioned in for quite some time, obviously trading it a lot as well. This actually ran up to 85 cents, but it had a pretty harsh rejection into this zone, potentially giving you a bit of an opportunity to accumulate. Now, technically, the level you really want to buy is the 72 to 74 cent level. But if you just want the DCA, anytime there's a dip, like we're getting a dip now, if we get a dip around the rate decision, you could also DCA in. You're going to end up getting a decent cost basis without putting yourself under pressure to exactly nail the entry. And I think that's my general advice for buying any coin in crypto. It's better to DCA than to try to nail the exact entry unless you obviously have very, very strict invalidation on those entries. So ENA is one position that I'm holding in my portfolio. I think it's a decent time to DCA, but you may see slightly lower at some point if we do have a bit of volatility around FOMC, which can happen because I'm still not expecting the highs in the market to happen for a couple of months at least. Another coin that I'm looking at, and this could break out quite soon, actually it's already up from my mention in yesterday's video, is Eigenlayer. You can see it's starting to form a bit of a bull flag on the daily, grinding upwards, making higher lows, lower highs, so typical compression that you see. And if we do see an extension from this level, even to this previous high from the breakout zone, that'll take us up 20%. And then after that, honestly, there's kind of not much until this next zone here at $2.50. So a breakout here could be quite big, and it's a strong ETH beta, and it's also related to the DAT narrative. And you obviously have a lot of these companies actually acquiring staked ETH using Eigenlayer to earn additional yield. So it's going to be powering a lot of Ethereum DAT. So as Ethereum treasuries become bigger and accumulate more ETH through staking, Eigen could potentially make more revenue. So there's a bit of a flywheel there that could be front run, which is why I started to build a position, but my bigger position would probably come on the breakout as a breakout trade, and I'll keep you updated as that occurs. So that's the Ethereum barbell. You can also look at some other betas as well that I won't go into today's video, but those are two of the main ones. Going on to Solana, I'll give a couple of main ones here as well. Solana, I still think is poised for upside. It's probably not as attractive as it was when I was speaking about it last week and the week before, but it's still relatively attractive as an overall macro bet. I would just probably wait for dips on Solana because I still think you're going to have periods where Solana has big sell-offs. We've seen it many times even over the past few weeks. I mean, if you go into the H4, it's been in an uptrend, but you have had these periods like this, which have given you opportunities to capitalize. So typically what will happen is it runs, it dips, it runs, it dips, it runs, it dips. It's making higher highs, mostly and higher lows. But the next sell-off that you see, one of these periods of price action, this would be an opportunity to accumulate. So you don't need to FOMO into green days. It's the same as Hyperliquid. Everyone's asking, should I buy Hyperliquid? But, you may actually see a sell-off. I mean, we've seen this on, you can see again here on the H4. It went up, it made a high here, then it had a downtrend. Then it went up, it made a higher high, then a downtrend. Still making higher lows, still in an uptrend, just like Bitcoin as well on the H4 and H1. When up here, you may actually see a bit of a downtrend. And these downtrends are the periods to accumulate. And at least then you have some invalidation levels. Like you could validate below the prior high. And you have this cluster here, for example, at like 49 if you wanted to have more of a bigger stopgap on hyperliquid. So that gives you an idea as to how I enter positions. But going back to Solana, there are some interesting barbell plays in the Solana ecosystem. So Radium's one. This is also coiling nicely. Chart looks very similar to Eigenlayer. You are seeing higher lows and you have a lower high. So you're seeing compression into a zone which could potentially lead to expansion. I do prefer Radium over Jupiter. I just think the chart overall looks a lot better and price action tends to respect a little bit better in terms of how it trades versus Solana as a beta, which is obviously its base token. The other thing I'm doing is I'm looking at accumulating a couple of the top memes on Solana. So obviously, you have WIF, you have PopCat, but the one that stands out to me is actually Mu. Also looks very good on the chart. You see it's making higher lows. It's had a big sell-off, which I think is an opportunity because it pumped into resistance, cooled off a little bit, but it's still maintained overall structure. And one of the reasons I prefer Mu to PopCat is due to relative strength. If you look at the PopCat market cap, it's 266 mil now compared to Mu at 268 mil. And I remember there was a time where PopCat was far ahead of Mu. So PopCat holdings have sold off drastically and the narrative has really died in some ways, whilst Mu's actually, although it's gone down, maintained relative strength. So that signals to me that on the way up when the market pumps, Mu should be a faster horse and it's now the top cat coin in the market. The other reason I like it isn't just the chart or the relative strength, it's also just the branding. Like we've seen assets like Pengu do really well. These are what I call like IP memes. I think there's a big narrative in the market for IP. I don't think people want copycat memes anymore. People want to buy into brands. People want to buy into ecosystems. People want to buy into communities. And what I like about Mu is that they have their own brand identity, their own IP, basically like the Hello Kitty of crypto, right? You can see that they're actually releasing an animated series, which I think is super cool. So they can continuing to push the boundaries and actually do stuff, unlike PopCat and WIF who aren't innovating at all. I mean, apart from the Sphere in Vegas, WIF hasn't really done anything. So the memes I'm looking at right now are the memes with genuine IP where I see the teams hustling. I see the teams grinding. I see them doing pop-up stores and doing TV series and all this sort of stuff like Mu. I respect that. And that's the thing that would make me compelled to actually purchase a meme in an environment where memes haven't been that hot. So that combined with the chart are reasons why I've been adding to my Mu position. And I think alongside Pengu, this is probably my favorite meme in the market in terms of IP. Speaking of IP, Camp Network can give you direct exposure to IP. So I think a big narrative heading into not only Q4, but obviously way beyond that is going to be AI. I think it's only inevitable that the AI narrative rears its head again and we see an AI run. There are a lot of interesting plays in AI. Maybe we'll go through them in future videos like robotics, and there's some interesting, compelling lower cap plays. But there's actually a big play that launched recently, and this is Camp Network. I've never spoken about it on the show before. I am an early investor, but I have conviction in this one as a slightly higher market cap play, but still at a reasonable valuation, which is 100 million market cap, which is not that high, I don't think, compared to some of the other AI tokens in the market which have recently launched. And basically what Camp Network does is it facilitates the IP economy. So you can see the global intangible asset or IP industry is actually a $62 trillion industry, but a lot of that IP is inaccessible, it's locked in contracts, and is blocked by convoluted systems. Camp Network is basically opening this up, allowing IP to be facilitated and traded on-chain, which I think is a massive narrative heading into a period in the market where people are valuing IP more than ever. And that's what's underpinning a lot of memes. It's also what's going to underpin the AI economy as well. One example of this is actually deepfake. So if you look at like what's happening with deepfakes and AI and all of this copycat content that's starting to creep its way onto social media algorithms, I think a very important thing is going to be verifiable authorship of content. So Camp actually partnered with Billions to make Proof of Humanity a primitive of on-chain IP. And all of these partnerships solidify it as one of the top IP AI chains in the market. So I have a bit of alpha for you because it's following a very similar fractal to previous launches. We know exactly how to play this. So I've talked about this on the show before. I'm sure if you've been watching me, you'll know what I'm going to say here. But new launches, they tend to have a massive pump, then a dump, then a pump, then a sell-off, accumulation period before the next big pump. We've seen this on Nillion. We've seen it on Bio. We've seen it on a recent launch, Sahara. Exact same price action. Massive pump, consolidation, pump, consolidation, and then a big pump. So it's this phase here where a lot of the early sellers need to be phased out. like this big pump and then this dump here where early sellers need to be phased out. It's the same on Bio. It's the same as Nillion. Like, I'll show you some more examples because I want to flesh this out and, really help you understand the fractal trade. So you see it on Nillion as well. You have this big pump on launch day, and then you see this selling, this gradual selling over time. You can see this on Bio as well. It took a lot longer, but it had a launch day pump, and then it had this big consolidation before it broke out and pumped again. But it generally happens with these new launches, especially the hyped new launches. Now, how you can play a token like CAP, if you just want to be really technical about it, is be patient. Obviously, fundamentally, I like the project, but if you're trading it, or, you're looking for a decent level to buy in, be patient, look for where it consolidates. This is probably a good level to watch because this was the launch price and it started to find a bit of a floor here, but you can even wait a bit longer, see where it consolidates, and then on the first breakout, and obviously this will take time to actually form, the range could be here, and this totally depends on the reaction in the zone. The range could also be here. It might take a few days or a few weeks in some cases to play out. But when you get that first big breakout, you can look at taking the trade from the new range low base to the new range high, and then you can actually hold a moon bag beyond. So I'll show you exactly how it played out on Sahara. It sold off. It started to consolidate. It started to reclaim this level, and then it broke out. There was a trade here from range low reclaim to range high. Then obviously you would have TP'd some here, ridden the rest, maybe laddered out some more, maybe sold the rest on an underside retest of this level, and potentially look to play the range low again. So these new tokens, they actually adhere to structure pretty well, and this is something that I also anticipate to form on CAMP, and it may actually be forming right now. So definitely add this to your watch list. And obviously having the low-ish market cap also underpins the fact that it could, 2 to 3x if you do get that pump to the upside. If it was like a $2 billion market cap token, I think it would be more muted because the amount of capital that would need to come in to actually pump price would be way, way higher. So those are some of the narratives I'm looking at. I'm looking at IP, Ethereum ecosystem, Solana ecosystem, and AI. Now I want to talk about one more. I'm not going to go fully in depth on it because I've spoken about it before, but I'm going to give you a new lower cap token now as part of Gem of the Day. And this is RWA and collectibles. So we've seen the Pokemon craze go crazy. Cards pumped massively. We've seen, Pokemon trading on chain really starting to gain a lot of traction. I do think there is an interesting narrative here which could pick up. Now, this token is extremely speculative and it's high risk, and I actually don't own it myself. But remember, Gem of the Day, as I announced yesterday and the day before, is a new series where I bring you the top token that my researchers recommend each day, and I give you my opinion on it. This is a way for every single day on the show to give you new alpha, new ideas for you to go and research. I want you to leave every single mile show knowing that you got some alpha. You got not only actionable stuff, but you also got ideas, and you just have a better feel for the market, and you have ideas to make money in the market. That's what I want to do. So I'm not saying to buy these or they're buy calls. I'm just presenting them to you, and you can do your own research. But this one's interesting. I've known about it for a while. It's called Fitcoin. Now, if you know the launch coin ecosystem, this is basically like the launch pad so new tokens can launch and get supported. Even though launch coin, it did really well and started to deteriorate, there are still some decent projects in the ecosystem which have sold off because the ICM narrative just isn't as hot now as it was. But Fitcoin, which is basically a marketplace which allows you to list clothing but also store like a portfolio of clothing and share your clothes with friends. It's actually quite cool. I did check out the app today. You can basically like upload like this jacket, for example, and then put styles together and share it with your friends. And then if I want to sell this jacket, there's a button where I can automatically relist. So it's quite a cool application, but the market cap's extremely low and the team keeps building. So 2.6 million market cap. I don't actually own any of this coin. I have no exposure whatsoever to this coin. But when I was looking through my researchers list and they send me 20 coins a day, this is one that stood out. It's like, okay, it's a low market cap. It's been around for a while. The token's been consolidating. Maybe it's one worth checking out given the fact that the stats look good. And then I used the app and I thought the app was cool. So I'm bringing it to you today as Gem of the Day. So make sure to subscribe because we're doing this every single day to make sure that you get the latest gem. The Discord, which gets all of the gems first, has the details here if you want to pause the video. Obviously, if you're in the Discord, you get these earlier and you get extra gems because some of the gems I also will post additionally in the Discord as well. And to conclude the show today, I am going to do the classic giveaway on exchanges. But unlike Blofin, now I'm going to give back to my loyal Bitget followers. If you've been following the channel for a while, I have had a Bitget link for a pretty long time. And there are a lot of OGs who have accounts with me. So we've selected, I think, 200 way more than that. I'm scrolling down. Over 600 of my Bitget people to win $100 today. So I'm just going to go through randomly and pick a few of you. And if you're not signed up, you need to be signed up for my exchanges because we're doing this every single day. You're literally leaving money on the table. If you are not signed up to Bitget, Blofin, or both, and we have amazing offers in the description below. But today we're showing love to Bitget, and then I have a very cool campaign to show you where you can get $40 of World Liberty Finance for free. But let me just tag a few of these. I'm gonna do 4 today. I did 4 yesterday. It's a bit more than I'm supposed to, but I'm just trying to kick it off with a bang. So here are the 4: 336, 709, 369, and 595. Everyone watching this video that has a Bitget account with me, even if you don't know if you do, just check because you may have signed up with me in the past. Go onto your phone app, click the top corner, and check your UID. It should be on your profile. See if it matches with any of these, because if it does, you'll be getting $100 added to your account. And if you don't have a Bitget account, we have an amazing offer. All you need to do is click on the link in the description below. You can win up to $40 in World Liberty Finance, and all you have to do is sign up, complete identity verification, deposit $100, and then trade $10 of volume. So you could literally buy $10 of Ethereum, Bitcoin, and then swap it back into stablecoins instantly and qualify for this $40 World Liberty Finance airdrop. So that is literally all you need to do. It's basically a 40% deposit bonus because you're just depositing $100. You are getting $40 worth of World Liberty Finance as long as you open one trade, which is more than $10. So this is a pretty amazing promotion for you guys to sign up, get an account, and start qualifying for these giveaways, which we're doing every single day on the channel, either with Bitget or Blofin. So I'll leave the link to both in the description below. One more thing I want to remind you of is the fact that I have a brand new video dropping on Crypto Edge tonight. So if you don't know what Crypto Edge is, it's my brand new channel where I'm doing evergreen content. So this was a 6-minute video. These shows are a bit longer. We go through the market. We do lots of giveaways. We have a lot of fun on this channel. But the second channel is pure evergreen. So it's short videos. This new video I'm dropping tonight is teaching you how to learn the basics of trading in 10 minutes. So it's taking my 6 years of experience and condensing it into 10 minutes to show you how to learn trading. So support, resistance, invalidations, all that stuff. We're going to cover the basics. So make sure you are subscribed to this channel. Link in the description below with all the other links. Subscribe to the channel because it's going to be absolutely amazing, the content we're dropping over there. I'll see you in the next one. Hopefully you have a lovely rest of your day. Peace out, guys.